डबल क्लिक 63 देखिए मैं इसी आ रहा है कैमरा ऑफ कर दो इसी क्यों आ रहा है अशोक कैमरा आपको मैं कर देता हूँ म्यूट भी
Good afternoon, Samaji.
नमस्कार चेयरमैन साहब विमल जैन जी नमस्कार.
Namaskar, namaskar. Start कर लेते हैं.
Hope you are enjoying your Hyderabad trip, sir.
It's not enjoyment. Hectic day. In the morning, I did personal hearing. Then I could meet with the Chief Commissioner CGST here.
Okay.
And now we are sitting for the webinar on Tran 1 and Tran 2. So let's start it because we are almost
Okay. So with the permission of Chair Shri Bimal Jain ji, so shall I start, sir? Right away.
Yes, Samaji. Yes.
Thank you very much, sir. Very good afternoon to all the participants, all the joinees. On behalf of PhD Chamber of Commerce and Industry, we welcome you all for today's webinar on how to file revised Tran 1 and Tran 2 by 30th November 2022. PhD Chamber of I would like to mention that the PhD Chamber of Commerce and Industry, under the Indirect Taxes Committee and the dynamic chairmanship of our Bimal Jain ji, is organizing many knowledge series and awareness creating programs since the last many years. So last year we organized the programs on the GST awareness and GST various issues related to GST, and these programs are creating a great ease of doing business in the country, and promoting the revenues of the government and creating ease of doing business for the entrepreneurs. So at this stage of PhD Chamber of Commerce and Industry, again for the current year under the new president leadership, we again have started the programs on the knowledge series, and this is our first program of the current presidential year of the leadership. I would like to mention that recently the Honorable Supreme Court of India has provided a one-time opportunity to all the aggrieved taxpayers to file Form Tran 1 and Tran 2 and claim their transitional input tax credit in GST system. In compliance of the Honorable Court's directive, the facility of filing Tran 1 and Tran 2 or revising the earlier filed Tran 1 and Tran 2 on the GST common portal by aggrieved taxpayers have been made available by GSTN from 1st October 2022, and as per the court's instruction shall be available to all aggrieved taxpayers till 30th November 2022. The Tran filing process has been enhanced and the user interface of the portal has been made more intuitive to make it simple and easy for the taxpayer to file their forms Tran 1 and Tran 2. So to create awareness and to simplify the filings, we have organized this program today for the benefit of trade and industry under the dynamic leadership of our chair, newly appointed chair, Shri Bimal Jain ji. So without taking much time, because we have a paucity of time and there are a lot of activities for Bimal Jain ji in Hyderabad. So I would request our chair, Shri Bimal Jain ji, chair of the Indirect Taxes Committee, to give his theme presentation. Before calling him, I would like to provide some brief introductory remarks about him. He is chair of our committee, Indirect Taxes Committee of PhD Chamber. He is the executive director of A to Z Tax Corp LLP, tax and law practitioners. He has a vast experience in indirect taxation, GST, services tax, excise, customs, VAT, CST, FTP, and all the DGFT matters related to trade and customs. Shri Bimal Jain ji, please.
Nanda ji, you mute yourself.
Yes, sir. Acha, all are requested to give your photograph, please. All the speakers, Mehta, Shubham ji, Saurabh ji, you take the photograph on your
Nanda
video.
ji,
Yes.
mute yourself.
Yes, sir. Yes.
Yeah. At the outset, let me thanks all the participants who are joining today on very important topic, filing of Tran 1 and Tran 2 in the light of Supreme Court judgment, Philco Trade Center Private Limited. We got three learned speakers today, Mr. Shubham Mehta, Mr. Yogesh Gaba, and Mr. Saurabh Kumar. They're going to make technical presentation. In my theme presentation, Objective H, I would like to highlight that where from we started, where we are, and why 30th November 2022 is very important. You may be having lot many queries in your mind, so we will try our best to resolve those queries. Though two circular are being issued, but let's see what best and what are the open queries still there. And for that, we got technical presentation. As a background, we all know we are talking about transitional credit. And relevant section for the knowledge section 140 to section 142 of CGST Act. Read with rule 117 to rule 121 is very important for understanding the provision of transitional credit by filing Tran 1 and Tran 2. Two important circular recently got issued after the Supreme Court judgment, Philco Trade Center Private Limited, circular number 180, dated 9th of September 2022, and circular number 182, dated 10th November 2022. As a background, what is important for us to know that we were having standard credit balance, which may be pertaining to central excise, maybe service tax, standing on appointed date, which is July 1, 2017, which was the credit pertaining to pre-GST era. It was permitted to be transitioned to GST regime by filing Tran 1. And only three conditions initially for transition of this standard credit, which I'm referring to, that it should be admissible under the GST law, and the taxpayer who want to transition such credit, they must have filed their 6-month all return preceding to the appointed date, July 1, 2017. And the last condition was that this credit should not be pertaining to manufacture of goods under exemption notification. But alongside, you would be having that you may have a credit of cess, education cess, secondary higher education cess, Krishi Kalyan cess. What happened to that? You may be having ISD credit. So that transition, how to be made and what are the challenges? You will get a lot of clarity today. And you got credit that may be pertaining to your engage in exempted goods and services and become taxable in GST regime. Or you may be works contract service provider, or you are availing abatement notification under service tax era. You are first stage dealer or second stage dealer, importer. You are VAT dealer and having a stock on which you have paid central excise duty. You may have central excise invoice or may not have central excise invoice. So those parameters are important for understanding sake. Transitional credit is a vested credit, vested right, substantive right for us. But we all know when GST got started, there were a lot of technical glitches, system glitches, that we could not submit Tran 1 or Tran 2 on time. If we are successful in filing Tran 1, we may have made mistake. Some mistake may have been made at our end. And we wanted to revise, but time period gone. And certain cases, we tried our best to file Tran 1 and we could not submit. Lot many things though. So you can categorize. You were having transitional credit. You wanted to file Tran 1, but you could not file Tran 1, the first category. You really honestly tried. You went to GSTN site, you tried yourself, but you could not submit. A genuine case. Another case could be you could file Tran 1, but there was mistake. And you wanted to revise it, which you can't do. Third case, you could revise the same, but again, you have made the mistake. And fourth category could be that you did not try at all. Though there was transition credit, but you did not give a try. And last date gone, 27 December 2017. So what is the way forward? What Honorable Supreme Court in the case of Philco Trade Center Private Limited has said, before I touch base those points, little legal jurisprudence. As you know that initially Punjab and Haryana High Court landmark judgment at Ford Technologies clearly says transitional credit is a vested right and it must be available to the taxpayer. System glitches cannot be a bottleneck that this credit can't be availed by the taxpayer. It was allowed. Then Delhi High Court judgment, again the landmark and laudable judgment, brand equity. Rules which is procedure can be directory in nature. It cannot take away my substantive right. And Honorable Delhi High Court has said that these rules are directory in nature, cannot limit. And they have allowed 3 years limitation period from July 1, 2017 until 30th June 2020, that credit would be available. And in that judgment, it was stated that CBIC must publicize to all the taxpayer who are aggrieved and file the writ petition, and who are aggrieved and could not file the writ petition. They should be allowed to file Tran 1. And one judgment, Bombay High Court, contrary, Nalco Limited. In that judgment, there was a cognizance that taxpayer even did not try to file Tran 1. So why he should be permitted? That he should be allowed after 27 December 2017, having these many background. Honorable judgment of the Supreme Court, Philco Trade Center Private Limited. What Honorable Supreme Court has said, one time, a special window going to open, 60 days window, starting from 1st of October 2022 to 30th November 2022. So 30th November is very, very important. And GSTN has issued advisory also that this time you should be sincere and careful while filing your Tran 1 and Tran 2, and that too within the time limit. So what is important for all of us together? Get prepared everything. Get all the documents, return and records, compile and reconcile. Prepare and calculate your transitional credit. And this time when you're filing your Tran 1, originally, which you could not submit, or filing the revised one, you should do your calculation at your best and make sure no mistake. Make sure no mistake. And last date would be 30th November 2022. One prominent question I normally get from the trade, that this is only for those taxpayers who could not submit Tran 1 and Tran 2 and file the writ petition, or it would be available to all the taxpayers who are aggrieved and they could not submit their original Tran 1 or Tran 2, or if they could submit but they have made the mistake, could not revise the same. So what is the answer for that? Honorable Supreme Court has categorically held it is open for all aggrieved person, irrespective of fact, whether you have filed the writ petition or you have not filed the writ petition. So very, very important, you should get set ready that in case you are having transitional credit, you must do the calculation, reconcile your calculation. You may have many queries. And even I have got certain queries, which I'm going to discuss today. But before that, let me summarize. Once you file your Tran 1 or Tran 2, original one or the revised one, irrespective of fact, whether you file writ petition or not, if you're aggrieved, you're allowed. We have seen many challenges. First example which I'm offering to you, and before I take this example, what would be then done by the department once you file your Tran 1 and Tran 2, then special 90 days window is being given to the jurisdictional officer. They will check and verify. And they will give you the opportunity of being heard, personal hearing, in case of any adverse order they are going to pass. So you're filing your Tran 1 and Tran 2. They will check and verify. In case they are passing any adverse order or they want some details, clarification, definitely they will give you opportunity of being heard. So you should get ready with all substantiation, document, invoices, return, records for which you are filing Tran 1 and Tran 2 in this spatial window of 60 days and 90 days given to them for checking and verification. Once they are satisfied, then this amount would be credited to your e-credit ledger. So this is the background. And even it is being stated that GSTN must ensure that this time no system glitches. So I do not know, I'm just checking out from all of you. If you're filing Tran 1 and Tran 2, this window, spatial window of 60 days, are you having any system glitches? If you're having system glitches, do write back to us. We will take up the issue with the concerned authority at GSTN and CBIC that this time this window either smooth or having some glitches. You can write back in the question answers box whether window is really working smoothly and fine, but that is how it is being stated. GSTN must ensure there is no system glitches this time. So some of the query which is coming to my mind, which may be important for today's discussion, and I'm leaving these queries to my technical speaker, those who are going to make presentation today. And maybe those queries are relevant for you as well, because you are looking for the answer of those queries. So to ignite your mind, to create your interest, take the query number 1, that I'm a taxpayer. I was having transitional credit, let's say 10 lakh rupees, but I can't file Tran 1. I could not file Tran 1. And reason could be, I said, first, I did not give a try at all. And I have debited this amount to my PL account, profit and loss account. So I did not try, debited to my PL account. Now this window is made available to me. Question which may be asked, am I entitled for? Can I really file Tran 1 by reversing this amount which I debited to my PL account? Can I really file Tran 1 now? I did not try means there is no lock seat. As per backend GSTN always check whether as a taxpayer did I try to file Tran 1. As I said, now Honorable Supreme Court has said it's an open window. Any aggrieved person can come forward, irrespective of fact, whether you have filed the writ petition or not. So what happened? I did not try at all. And Bombay High Court judgment against me, Nalco Limited. Can I go for it? And as I said, I debited to my PL account. Now I want to reverse that particular entry and want to take this transitional credit, whether Tran 1 permissible or not permissible. Second situation, I did try to file Tran 1, but could not submit, system glitches. And lock seat, which is being maintained by GST and Common Portal, they are also having lock seat that this taxpayer has really given a try, but he could not submit because of technical glitches. Can he submit the Tran 1? Second point. So these are the pointers which would be interesting for you to take a note of it. Third could be, you could file your Tran 1, but made mistake. You were supposed to revise, you could not revise. So what happened? Can you do that? With a revision permissible, you could submit your original one, but made mistake, could not revise the same, can be revised the same. Fourth point, and very interesting. Lot of us did try to file Tran 1, could not submit, system glitches. We have written to IT grievance cell committee, special committee formed, white circular, April 2018. And we have submitted our grievances. We didn't heard anything from their side. They're keeping mum. What we did, we have taken manual credit in our GSTR 3B, transitional credit. We could not submit Tran 1, wrote to the concerned authority. Concerned authority did not say anything to us, and we have taken manual credit, and we are continuing with. So that manual credit taken of transitional credit, and we are continuing with, and we have utilized the same also. So what happened? Corresponding case could be when you have taken manual credit, transitional credit in 3B, audit came up. And department said, no, this credit is not available to you because you could not submit Tran 1. You need to reverse it. And what you did, you reversed the same also. Sometime this question comes, I'm reversing transitional credit. Department is demanding interest, right? But the interest leviable on reversal, one question. Another question, okay, I reverse my credit, transitional credit. But can I again now take the credit, transitional credit, by filing Tran 1 in the light of Philco Trade Center Private Limited? I hope you must be getting these pointers touching to your queries. And these are the theme which I want to draw today for this Tran 1 and Tran 2. Going forward, one live case study. There was one taxpayer could not submit Tran 1 on 27 December 2017. He had filed grievances to the IT grievance cells, jurisdictional commissioner. Quite obvious, sometime you may have got the answer, but I'm sure that maximum of us may not have got the answer. And a lot of litigation. Some taxpayer has gone for the writ filing, some has not gone for the writ filing. If you have filed a writ petition and by way of the High Court judgment, you got some relief. And in the instant case which I'm referring, this SSC has got the relief from Delhi High Court. And Delhi High Court has said to the department, accept their manual Tran 1. That is the judgment we got from Delhi High Court. Then what happened? We have taken credit in our GSTR 3B sometime in April 2020. We have taken this credit, manual. But we have intimated to the authority in the light of Delhi High Court judgment, since it is being permitted, manual was allowed. I submitted manual to you and I've taken the credit in April 2020. Now, they have used the credit also, but department has gone against and they have filed appeal against the Delhi High Court judgment. And matter is pending before Honorable Supreme Court. And this particular matter is not being considered in compilation of Philco Trade Center Private Limited. Philco Trade Center means there is more than 400 cases compiled together. But this particular judgment which I'm referring to was not the part of Philco Trade Center Private Limited. So what happened to this SSC? He has taken the credit on filing the manual Tran 1 on the basis of Delhi High Court judgment, intimated to the authority, and now this matter is pending before Supreme Court, not being considered in Philco Trade Center Private Limited. What happened? AG supposed to file Tran 1 once again with the special window open till 30th November. And now again, if he's filing, then that would be amounting as if he's taking a double credit. But answer could be no, he can file only for checking and verification, which was not done earlier. Because we filed manual Tran 1, which department did not check. Let me file Tran 1 and let them check. I will put certain comment in my one column that in the light of Delhi High Court judgment, we have taken a manual credit by filing manual Tran 1. We are filing this Tran 1 with the official window just for your checking and verification. So that let this part be over. So tomorrow this matter coming up before Honorable Supreme Court, we can say this fact before Honorable Supreme Court that we filed this Tran 1 in the spatial window for their checking and verification. And once after checking and verification, if they're allowing, I will not take that credit. If they're giving automatic credit in my e-credit ledger, I will reverse the same. I will intimate to the authority. Such a question and answer still not there. Let me tell you some of the important pointer. You were having some SGST credit, VAT credit, which should be transition as a SGST credit. And you were supposed to get C form, H form, I form. So this credit was dependent on the submission of forms, and you could not submit these forms by 27 December 2017. So what happened? Can you take such credit, SGST credit, in this window of 60 days, Tran 1? As per circular number 180, 9th of September 2022, barring that, they are saying if you're getting these forms after 27 December 2017, then you can't transition. So what is the way forward? Am I supposed to then get the assessment done and take the refund? That is the option looks like, but circular is creating condition once again. So I do not know, when we are giving this window, one-time window, why circular restricting such kind of stuff? Another situation could be, you may have been got so-called notice for transitional credit availed by you. Maybe you have manually taken the credit and then you got so-called notice, or you have taken the credit which was not eligible to you. And you have reversed also the way you want it to be. But I'm only creating a point if any so-called notice is being issued and matter is pending before adjudication authority or appellate authority. Then such credit cannot be transitioned by filing Tran 1 and Tran 2. So these are the rider which is being created by circular number 180, 9th of September 2022. For Tran 2 specific instruction that you need not require to file tax period wise. It should be consolidated. So what is the way forward? In my theme presentation, Objective Watch, to ignite your mind, to create your interest, I'm giving these pointers so that you get relevance of those answers, which is being delivered and deliberated by the learned speakers today. So get set ready. Many things we are going to discuss today pertaining to Tran 1 and Tran 2. It may be pertaining to original credit or revised credit. Tran 1, Tran 2 originally filed, could not be filed. Revised, could not be revised. Many questions. And then I've said exempted goods and services. First stage dealer, second stage dealer, importer. So get set ready. So we got 3 learned speakers. So detailed technical presentation, what are the particulars and column in Tran 1 and Tran 2? What is the relevance of those columns? What to be filled up, where to be filled up? What are the caution and precaution? I'm sure you will get all those pointers clearly delivered by the learned speaker. So thanking each one of you who are joining today on this important webinar on Tran 1 and Tran 2, and thanking learned speakers as well, that they are going to touch base and catch up my pointers, which I got from you only during their deliberation. Thank you very much once again, and handing over Nandaji to take it forward.
Thank you, sir. Thank you very much, sir. Now I would request to Mr. Jogesh Gava to present his presentation overview of Tran 1 with all tables to be filled about transitional credit and related issues. Before calling him, I would like to say a few words. Mr. Jogesh Gava is a managing partner of Gava & Company. He is a qualified chartered accountant for last 10 years. Mr. Jogesh is working extensively on advising corporate, including large MNCs under GST, custom, excise, service tax, and VAT law. In the initial stage, his career only is successfully represented his client before custom, excise, service tax, affiliate tribunal. Adding to the experience in his representation before the National Anti-Profiteering Authority in one of the large consumer durable companies. He is also a nominated faculty to the Office of the Director General of Audit, Central Receipt, SERA Audit, for in-house training of the officers. Jogesh ji, please start your presentation, sir.
Thank you, Mr. Nanda, for
Yes, sir.
introducing me
Please
to
share
our
screen.
panelist and the member of this extreme chamber. Am I audible, sir?
Yes, you are audible.
Okay. So this is our first association with PhD Chambers of Commerce. And first of all, before starting the presentation, I would like to thank the PhD Chamber for giving us the platform to present our thoughts to the audience. And I would like to thank Bimalji also for this opportunity. And we start the presentation right away. Yeah. Is my presentation visible, sir?
Not yet. Just coming. Screen sharing is coming. Yeah, coming. Coming.
Sure. So, as you can imagine from the picture itself, if your transition was smooth, the person with the briefcase is you. And if your transition was not smooth, you can imagine the person laying down is actually you. So that is how we have seen the litigation in the transitional provision regarding the carry forward of credits and non-carry forward due to the technical glitches. And ultimately, the Supreme Court, as Bimalji had said, that let down that everyone is now eligible for filing the Tran 1 or revising the Tran 1. So since my topic is table 1 and related issues, so we'll discuss what is there in Tran 1 table. We'll discuss the legal provisions. We'll discuss the CBIC circulars, and we'll discuss the credits. Firstly, important to note that there are three forms to be filed. One is GST Tran 1 or Tran 2. September 2022 required that the taxpayer will have to file in an Annexure A attached to that circular. So this annexure is nothing but a declaration of any litigation underway relating to already claims and transitional credit. And third is Tran 1, Tran 3, which is if applicable. So these are the basic forms you will have to file. Then there was a circular on November 10th, circular number 182, which prescribes the guideline for verifying the transactional credit by the officers. And there are four important points which the circular mentions. First is that Supreme Court has only allowed filing or revision of Tran 1 and has not allowed to revise the returns filed under the existing laws. So this is a very important point that you cannot revise your existing returns. So if you have claimed 100 rupees in your last service tax return, now you cannot claim 120 rupees in Tran 1 just because you have missed 20 rupees. If you want to claim 20 rupees, there are other ways for claiming the 20 rupees. Second point is where credit claim in the first Tran 1, original Tran 1, is higher than the revised Tran 1, then department will recover the excess credit with interest and penalty. So here the point comes, suppose if I have not utilized the amount, whether the interest and penalty will come even if I have not utilized the amount. That means I have only, suppose in original Tran 1 I claimed rupee 120, now I am revising it with 100 and I have not utilized the 20 rupees. Am I liable to pay interest or penalty? That is a question. The circular says that that will be recovered with interest and penalty. So obviously interest is not there because it is only there when it is availed or utilized. The question still lies for the penalty under 73 or 74, depending on the situation. Point number 3 is credit taken should be less than the closing balance of credit in the erstwhile returns minus the various cesses. So if you have Senbet credit of rupee 100, out of which 20 was your cess, then in this Tran 1, you can claim 80 or less. It should not be more than that. Point number 4 is where transitional credit claimed has VAT entry component, VAT or entry tax component, the jurisdictional CGST officer shall refer the same to the SGST officer verification or vice versa. If the SGST officer is looking after your Tran 1, he will refer the CGST component to the CGST officer. Now, after getting the important points of the circular, we straightforward go to the table because we have a lot to discuss and the time is not very long with us. So table 5A, the first and the foremost table, having its backup in section 140 subsection 1, subsection 4 clause A, and subsection 9. So what are these section talks about? Before dealing with the table, we'll discuss the sections. So section 140 subsection 1 talks about carry forward of Senbet credit claimed in the final return under the erstwhile laws. So when I'm talking about the final return, I'm talking about the final return before its revision. So if you have revised your return and claim the excess ITC in the revised return, you would not be able to claim the excess IT, carry forward that excess IT in Tran 1. You can only get the refund in terms of section 142. Now section 140 subsection 4A, it pertains to taxpayers supplying both taxable and exempted goods, and to the extent of taxable supplies, he has availed some Senbet credit in the erstwhile regime in the final return. That credit he can carry forward in table 5A. 140 subsection 9 pertains to the reversal of credit, which due to non-payment to your vendor, you have reversed the credit. So earlier it was 3 months that if you won't pay to your vendor within 3 months, you have to reverse your credit, Senbet credit. And if you have reversed it before 1st July 2017, now you can claim it, provided that you make payments to your vendor within 3 months from the appointed date. So that way, this is the 5A table. So first is the registration number under existing law. Then tax period to which the last return filed under the existing law pertains. So you'll have 6 in the drop down on the portal. You'll have 6 months, Jan to June. You can select June. Date of filing of return. What was the date you filed the return under the erstwhile regime? And then balance Senbet credit forward in the said last return. What was the total amount of balance Senbet credit? It is the total amount, not the amount after some deduction of. Sixth is the amount eligible Senbet credit admissible as ITC of central tax in accordance with the transitional provision. So this is the amount which you have to mention as what you want to carry forward. And that amount should be admissible as ITC under the GST laws as well. Now, after looking at this table, there are various questions which arises. First one is the condition. There is a condition of under section 140 subsection 1 that you have filed the returns for past 6 months. Only then you can avail the credit, or only you can carry forward the credit in the GST regime. So, for example, one of the situation which arises is that if you have multiple units under the erstwhile regime, and in the GST regime you have a single unit, or second situation, you had single unit in the erstwhile regime, now you have multiple units. So question is whether all the units under the erstwhile regime had to file their return for the past 6 months, and then only the single unit will be entitled to claim the credit. The answer is no. If you have 4 units under the erstwhile regime and now you have a single registration in the GST regime, then you can still put yes, on the portal, and you can claim the credit for the unit which had filed all the requisite returns. So this is one important point in the first condition. Other condition which we have discussed and the circular is also talking about is credit of cesses shall not be allowed to be carry forward. Now there is circular number 182, there is government GST Twitter handle, and there is advanced ruling authority in Kansai Narolak Paints, and there is in Sutherland Global Private Limited also there is a High Court decision that restrict the carry forward of these cesses, and the High Court decision is now pending in the Supreme Court. We'll have to see what the Supreme Court says, but for now the government is very clear that these cesses shall not be allowed to be carried forward. And they, as far as the arguments are concerned, the merits are concerned, we are not going into diving deeper into the merits. Ultimately, the matter is sub judice, and Supreme Court will come out soon with the answer. Another condition is the credit is eligible as Sanvet credit under the erstwhile regime. So whatever Sanvet credit you are actually carry forward into the GST regime, that must be eligible as Sanvet credit at the very first place under the erstwhile regime. So that means you have to see whether you were making exempted as well as taxable supplies under the erstwhile regime, that were you were engaged in exempted goods or exempted services or not. You'll have to see whether your goods or services actually qualified as input or input services under the erstwhile regime, or you have claimed the Sanvet credit within 1 year, and there are multiple conditions to look at the eligibility of Sanvet credit under the erstwhile regime. So this is also important. Now there is a CBIC circular issued in February 2018, which is very important in the sense that the CBIC says that the taxpayer should not utilize the transitional credits towards GST liabilities where such credit is held inadmissible wide an adjudicating order or an order in appeal as on July 1, 2017. For example, you have a lot of accumulated credit of 2015, 16, 17 in your final return. Now you are carrying forward that credit into the GST regime. You can carry forward very well. However, the circular imposes a restriction on the utilization of such credit. So if your carry forwarded credit is held inadmissible in any adjudicating order or before the commissioner appeals, then you cannot utilize that carry forward credit. If you utilize that forward credit without going into the merit, the circular says it will be recovered under the GST provisions. So they will not wait for you to file an appeal or going into the High Court to say that I can utilize. They will right away proceed towards the recovery of that credit. Another important and the most important part is that whatever credit you are carrying forward in the GST regime has to be admissible as input tax credit under the GST laws. Now, this is very, very important in the sense that it opens a Pandora box. For example, goods will talk about input or input services which were allowed under the erstwhile regime but not under the GST regime. So you have received some goods in the factory and you have availed the credit. Now those goods were destroyed on the manufacturing floor by fire or by something, not as an inherent manufacturing loss, destroyed by fire. Okay, that Sanvet credit was allowed under the erstwhile regime. However, it is not allowed under 17(5) of the CGST Act. Second scenario is food and beverages in case of sale promotion event, allowed under the erstwhile regime, not allowed under GST laws. Club membership for sales promotion, allowed under the erstwhile regime, not allowed under the GST laws. Then there is another most important point is services in relation to modernization, renovation, or repair of factory or office premises, for example, manpower, architect, painting services not involving goods. So that was allowed under the erstwhile regime, not allowed under the GST if capitalized. Because under GST, the definition of construction itself involved modernization, renovation, repair, etc. if capitalized. So these are certain examples which were the Senbert credit on which was allowed under the erstwhile regime, but not under the GST laws. Now, these are the apparent things we can see. What about the application of Section 17(2)? If you have taxable services or goods under the erstwhile regime, but now have both taxable and exempt supplies, so would you be able to carry forward the credit, because ultimately the GST law allows only proportionate credit when it comes to taxable and exempt supplies, and how much credit you can carry forward. So whether section 17(2) is to be checked as well, and if 17(2) is to be checked and 17(5) is to be checked, now tell me whether section 16 is to be checked as well or not. Section 16(2) states that you are entitled to input tax credit only when your supplier pays the taxes to the government. Now, this condition was not there under the erstwhile regime under the service tax and excise law. Yes, under the VAT laws, the condition was there, but my question is limited to the service tax and excise laws, that your manufacturer or service provider say did not pay the taxes to the government. But as per 16(2), your credit is inadmissible then, because your manufacturer and service provider did not pay the tax to the government. And then we will argue the Arise India decision, the department will argue the Mahalakshmi decision in Bombay High Court, and so forth, so on and forth. So, and if we have to see this condition of credit admissibility to cover all the provisions of credit admissible eligibility under the GST laws, then section 16(2) is going to hit very hard as far as the supplier paying the taxes to the government is concerned. Another argument you would say that, Yogesh, we don't have to prove that the manufacturer or the service provider have paid the taxes. The department has to check whether they have paid or not. The answer, in my view, may not be, in a sense that section 155 is saying something else. And that is how the department is distinguishing this condition under the erstwhile regime case laws, VAT case laws, to the GST case laws. Under VAT case laws, section 155 was not there at all. What section 155 says that where any person claims that he is eligible for input tax credit under this act, and this is one of the condition of transitional credit, where you claim that you are eligible for ITC under this act, the burden of proving such claim shall lie on you, not on the department. Department, you cannot say that please check at the supplier's end. No, under GST, you will have to show that we have checked at the supplier end, we have received the undertaking. I'm not going to 16(2) in a detail, but from a transitional perspective, since this is a condition, and in my personal understanding, if 17(5) is to be looked, then 16(2) is to be applied as well. Yes, we can challenge the constitutionality and all, but I'm not going into that. Simply on the apparent application of provision, section 16(2) is also applicable. Then we have table 5B, which pertains to the VAT laws carry forward of state taxes, and it is dependent also on the forms which you were supposed to receive for concessional sales made under the erstwhile regime. So you'll have to fill that table. Details of statutory forms received for which credit is being carried forward. The period is from April 2015 to June 2017. So C forms, F forms, H and I forms. C form is for 2% sale to a registered dealer. F form is for stock transfer, branch transfer. H and I forms for export and SEZ, concessional rate. So you'll have to fill these table, name of the issuer, serial number of the form, amount in the form, and applicable VAT rate in the selling state. The related table, the final table through which you will take the credit to the GST regime is 5C, tax carry forward to e-credit ledger. So first is the registration number in existing law, balance of ITC of VAT and entry tax in the last return. So for entry tax, you can only take the entry tax here when it was allowed to be set off towards the VAT. Otherwise, it is not allowed. So balance of ITC and VAT and entry tax in the last return, you'll have to mention in two. Turnover for which C form is pending. Now, which turnover? Period of the turnover. Here in this table, the period of turnover is not given. However, if you see the manual on the GST portal for filing the transitional tables, they have mentioned that April 1, 2015 to June 2017 period is to be taken for point number 3, 5, and point number 8. However, since in the form as well as anywhere in the law, this period is not given for this table. So it seems to me, and in my personal understanding, we have to mention only that turnover for which the ITC is, is linked, which we are actually taking in table number 2. So if your ITC is attributable to these turnover, then only you mention this turnover pending for which C forms, F forms, or H and I forms are pending. Okay. So this is one. Second, there were provisions under the erstwhile VAT regime where for making stock transfer or interstate sale to registered person, you will have to reverse certain portion of the your input tax credit. For example, in Tamil Nadu, in section 19(4), clause 1, you'll have to reverse 4% of your ITC if you're making this supply. Okay. So that 4%, because you have already reversed at the time of making interstate supply. So now what they are saying is that you can claim that back. So for table 2, you can add back your point number 7, that is ITC reversal relatable to C forms at 3 and F forms at 5. So you add back this to your ITC in last return and deduct the ITC pertaining to C forms, pending C forms, pending F forms, and pending H and I forms. And in table number 10, the formula is 2 minus 4 minus 6 plus 7 minus 9 if we open the bracket. So there is now this table, look at this table. Very important point comes in the circular regarding this table. We'll discuss the circular, but this is another case law. So in this case law, the Supreme Court was dealing with the fact that TVS Motors Company Limited actually supplied made interstate sales to a government entity. That government entity was unregistered, and because of that, they could not issue the C forms. And therefore, under the TN VAT Act, the department asked to reverse the input tax credit because you could not furnish the C forms for the interstate sales. Now, the assessee argued that when it comes to the exclusive sale made to the government, any government state, they are not supposed to issue C forms because even though they are dealer, they are not supposed to take registration under the VAT laws because they were exempt. Also, there is no evasion of taxes. All the taxes are secured at the supplying state. So therefore, the Supreme Court held that a dealer is entitled to ITC of interstate sale made to any government entity, any government as a government of a state. So this way, if any of the show cause notice you have received for which you have transit the input tax credit of the VAT pertaining to a government interstate sale, and department is asking for you to reverse in any of the state, you can take the help of this Supreme Court decision. Now, question is, what is the good merit in the case relying on the TVS motor decision. Okay. Mr. Nanda, my internet connection seems unstable. Just do let me know in case my voice, PPT, or video is not
Yogesh,
proper.
your voice is cracking in between.
Okay, okay. Thank you so much, sir. Is it fine now, sir?
Yeah, PPT coming in, and so you please finish because time is also running fast.
Sure, sure.
Yeah.
Table number 5 is example of TVS motor decision.
Again, your voice gone, Yogesh.
See, however, this is not
Coming
correct.
now. Coming.
Yeah. So the circular imposes a condition to avail credits in 5C, 5B only when you have got these forms before 27 December 2017. However, we believe that the circular, first of all, is going beyond its powers, that they are restricting the ITC for the state laws. The CBIC circular cannot do that. This is first. Secondly, the second proviso to section 141 prescribe a 3-month time limit read with rule 12 of CST registration and turnover rules. That 3-month time limit can also be extended by the commissioner of a particular state or a prescribed authority. And if that period is extended, C form and F form or H form or I form can be issued even after that time period. So this circular prescribing the time period limiting this may not be a proper interpretation of law. Then we are going with table 6A, which pertains to capital goods. So in the erstwhile regime, this pertains to the erstwhile center laws, and below is the erstwhile state laws. Both are similar tables. So the matter is that in the erstwhile laws, in VAT as well as central laws, you are entitled to take certain portion of the capital goods in the first year or in certain first quarter or something, and then rest you can avail in subsequent periods. Okay, so if you have so for availing the unavailed credit of input tax credit under the VAT or SENVAT credit under the central laws, you can carry forward the credit in this table 6A and 6B. Another important clarification is that if no credit was availed earlier and you wish to avail 100% credit now, for example, in April 2017, you received certain capital goods, you did not avail 50% of the SENVAT credit on that capital goods, and you thought I will be availing in July. Then the CBIC says, no, you cannot avail the 100% capital goods, 100% SENVAT credit in this table. In our understanding, the CBIC circular may not be correct for the reason that if you read rule 2 under this erstwhile SENVAT credit rules, it says in the first year, you can avail a credit of amount not exceeding 50%. So if in the first year you have availed zero, that is also an amount not exceeding 50%. And if in the GST regime you want to take 100% credit, in our personal understanding, yes, you can very well avail. And this circular is actually a problematic circular in Maharashtra. CBI, the department has actually issued the show cause notices for this matter. Then we are going for table 7A, details of inputs held in stock. So it pertains to carry forward of tax credit by a registered person who is not liable to registered or engaged in exempt supplies, first stage dealer, second stage dealer, or composition dealer, or supplying exempt goods. Also supplying taxable as well as exempt under section 140 subsection 4 clause B. So this is the table. You'll have to mention the HSN, units of whatever stock you have, quantity, value, and eligible duty paid on such inputs. And how will be eligible? How will you see the eligible duty? You must have the duty paying document with you. If you do not have the duty paying document, I think it is covered by another topic in Tran 2, so I'll not touch upon the CTD part or Tran 2. If you have duty paying document, you'll have to mention the duty charge on that document. CBIC circular in this regard says that if taxable person was registered under the Sunward credit, under the central excise or service tax return, and taking credit for inputs relating to exempted goods in section 140 subsection 4 clause B, then you have to verify, the department will verify whether the rule 6 of the Sunward credit rules 2004 was followed or not. Going forward to table C, this is like table A, but however, it pertains to the VAT laws. So similar table, if you're not registered providing exempt supplies, then whatever stock you have in your inputs, semi-finished or finished product, you can claim the input tax credit. 7B table pertains to section number 140 subsection 5 and subsection 7. Subsection 7 pertains to input tax, input service distributor, and subsection 5 pertains to that the taxes are paid under the erstwhile regime. However, you have received the input or input service in this GST regime, provided that you have recorded the invoice within 30 days of the appointed date. So this is the provision. As far as the ISD is concerned, you can avail the input tax credit of the ISD, even though the invoice was issued post the GST regime, post appointed date. So registration number of ISD, invoice number, invoice date, description, quantity, value, and eligible duties and taxes, and date on which the entry was recorded in the books. And since it pertains to the transitional in transit credit, because you receive the input or input services in the GST regime, whereas taxes was paid in the erstwhile regime, the CBIC says if the in transit goods, the movement and the quantity is in exorbitant amount, then transport document verification may be considered. Table number 8 pertains to centralized registration. If you have centralized registration in the erstwhile regime, you can allot that your input under your Sunward credit in the last return to any of the registration in the GST regime. So if you have 4 units, you had one centralized registration, you had 100 rupees of credit in that centralized registration, you can distribute that 100 in a prudence ratio, or you can allot that 100 rupees to a single registration as well. Registration number under the existing laws, first column, tax period to which the last return pertains, date of filing of return, balance eligible Sunward credit carry forward in this last return, and GSTN of the receivers, ITC of central tax transferred, document number, and the document date. The CBIC has imposed a check and balance that receiving unit have not filed Tran 1 to avail this credit, as this would lead to double credit of receiving unit. So this credit will automatically go to the e-credit ledger of receiving unit. However, the receiving unit should not again avail this in their Tran 1.
So Jogeshji, pardon me, now going to time constraints.
Sure. So I'll take
Please.
only two more minutes.
Okay.
So in table number 9A, stock with job worker. So if you have sent goods to the job worker before the appointed date, you should receive it within 6 months of the appointed date. Otherwise, it will be liable to reversal of input tax credit or payment of GST liability. So these are the details. As a job worker and as a principal, you will have to fill. If you are not a registered job worker, you can give it to your principal for filling this table. Stock with agent, again, the principal as well as the agent has to fill these two tables, 10A, 10B. In the GST regime, as you already know, that Schedule 1 says that principal and agent supplies are taxable. So due to that, you'll have to mention the detail of stock with the agent, and agent can avail the input tax credit if he will be reverting back goods to the principal and supplying GST, applying GST. Section 142(11)(c) pertains to the works contract mainly under the existing laws, where you have paid VAT as well as service tax. Now you're again paying GST because ultimately the supply is now being made. Then you can claim the refund of erstwhile VAT and service tax paid in the erstwhile regime. Goods sent on approval basis is similar to the agent. If you have received the goods within 6 months, for the goods sent 6 months prior to the appointed date, you won't be able, there is no chargeability of GST or reversal of ITC. However, if you're receiving it after 6 months due to rejection or return, there will be GST implications. So this is all about Tran 1. Due to paucity of time, we could not explain
Yes,
it.
sir.
Yeah.
Okay, thank you, sir. Thank you very much for your very insightful presentation to all our participants. Now, I request to Mr. Shibam Mehta ji to present his presentation on impact on decision on ISD related credit. Before calling him, Mr. Mehta is a partner in Lakshmi and Kuvar and Sridharan. He has been practicing as a tax lawyer for more than 12 years in Lakshmi, Kuvar and Sridharan. His area of practice covers service tax, central excise, sales tax, and GST. Mr. Mehta is a qualified chartered accountant and LLB. Yes. Mr. Mehta, can you hear me?
Yeah, good afternoon, everyone.
Yeah, good afternoon, sir. Good afternoon. Please.
Good afternoon, good afternoon. So, sir, my slides are visible.
The slide is not coming. Now coming. Yeah. Okay. Now came.
Just one minute. Are the slides getting changed also?
Yeah, you are muted. Now coming. Supreme Court decisions.
Yeah, okay. Yeah, good afternoon, everyone. Thank you so much, PhD and Vimalji, for giving this opportunity. Though we are talking about Supreme Court decision and how it has rather, it's more like a welcome move for many of the taxpayers who couldn't file the Tran 1 due to various reasons, maybe technical glitches, concerned person not available, etc. This decision, like what Mr. Bimal Jain said, is very, very wide. They're not saying anything about whether you have were able to file, whether you are a party to this writ petition. So they have opened the gates for everyone, and precisely, I think that's why department has also issued a circular. They have opened this Tran 1 once again. So, but having said that, what we should be very careful about is that this is a final opportunity. At least it looks like that. I mean, I don't think you will get another opportunity to recover the losses of credit which happened at the time of transition because the window got closed. So this time we have to be double cautious. We have to be very careful and also take into account various provisions, circular or judgments, or if required, take help of legal practitioners to just make sure that this time you are just right. That's what I can say. But effectively, my today's topic, like what Nandaji explained, is on ISD related credits. Why this topic is important is I feel this is my personal view that ISD, since the day it was introduced in service tax till date, is one area where there is absolutely no clarity whatsoever. Even the transition mechanism which was suggested for ISD was not an exception. There was complete chaos when it comes to ISD as to how I have to take the credit of this ISD registration, because as we all know, the transition was for the migrants. So if you had an existing registration, you were able to carry forward those credits by way of Tran 1, Tran 2, etc. And once you migrate into GST, they were giving you the benefits for taxes paid in the pre-GST regime. Of course, since this is a benefit, it was attached to certain conditions. But when it comes to ISD, somehow there was no transition of ISD, if you ask me. Rather, GST ISD was completely new ISD registration, and earlier ISDs were considered to be something which has lapsed with the old regime. Now, there was no transition. Effectively speaking, there should not be any transitional credit. Now, once Supreme Court came up with the decision, which today is the theme of the presentation by everybody with this Philco Trade Center decision, what it also is for all those people who had earlier ISD registrations and credits and they have committed certain faults. Now, this is the last opportunity to do it just right for ISD. I'll tell you first of all what was the issue in the ISD, then I will touch upon what are the various High Court decisions pertaining to this Tran 1 of ISD, and then I will come on various scenarios. Considering that I have a time frame of 20, 25, 30 minutes, as I was told, I will be really quick. If any part of my presentation and you are not able to get it, you have to ask in the question answer session, or you can reach out to me over my personal number on my mobile. I can explain it to you, right? Now, just to start with, what is the problem is, when I have ISD registration, when I do a transition in GST, when I filed the Tran 1, the amount which was mentioned in Tran 1 of ISD, ideally they should not have been in the Tran 1 itself. Because as I explained, there is no transition of ISD. There was a fresh ISD which was given and the old ISD has lapsed. So effectively, there should not have been any form Tran 1, but system allowed many taxpayers or every taxpayer to file a ISD Tran 1 also. And when it happened, when you have filed the Tran 1, the amount was not reflected in your electronic credit ledger. So what many of the clients did was, they took the credit in their normal registration by filing a 3B. And since the electronic ledger of new ISD never reflected the old credits, which was there in pre-GST regime, they were not able to file GSTR 6, etc. And there was no corresponding reflection in 2B of the recipient registration. They started filing this GSTR 6 manually. They started issuing the invoices manually, and they started availing the ITC in their 3B. Till that time, there was no problem whatsoever, because ultimately the logic of this decision was you should be able to use these old credits to set off your future tax liability. There was no problem whatsoever. The problem came when the audit started, or when after filing a Tran 1, there was an amount which was reflected in your electronic credit ledger, but you were not able to further distribute it, or there was no amount which was reflected in the credit ledger itself. And you cannot find GSTR 6, etc. Now, in all those cases, department started disputing is that this is not the manner in which you should have availed the credit. This is certainly not a manner. You should have ideally taken the credit in your normal registrations, Tran 1. That's what their initial objections were. Now, if I look at 140 subsection shall be eligible for distribution within such time and in such manner as may be prescribed, even if the invoices relating to are received on or after appointed date. So two things were clear. The services which are received by the ISD can be distributed under 140 subsection 7. Second was, even whether these invoices were received by ISD prior to 1st July 2017 or after 1st July 2017, you were entitled to distribute. But how to distribute, which ratio to apply, how to transition it, there was no mechanism whatsoever. Only for the table 7B, which Mr. Yogesh just explained, used to have that ISD column there. Now, having said that, one more important point, which I feel is why this provision is problematic, is talks about input tax credit. Now, input tax credit, if I go by the definition of the Act, means credit availed under this Act, under CGST and SGST. So, if you look at the language of the section, at the time of framing itself, there was a problem. No mechanism which was given to distribute the credit. There was no way in which the units could have availed the credit. So they were left with only one option, And as you all know, where you are not able to avail any credit, you only filed one solution, take it in 3B, jab hoga dekha jayega. And now after 5 years, many of the clients have started receiving show cause notices. Even some of them have even negative orders against them. So that is the plight today. Now, what to do if I look at various decisions of ISD? So the first one which came for a rescue was the Gujarat High Court. Like in many other matters, this was also, I feel, the one which came up for the rescue was Gujarat High Court, wherein in this case, there was a credit balance line with the ISD. SSC has filed Form GS6 for transferring the credit, but due to the system error, they were not able to transfer the credit. So far as this is concerned, but as I explained to you, the amount was not getting reflected. You were not able to transfer it through GSTR6, etc. And they went ahead and before filing this writ petition, if you read Bodil Chemicals Limited Gujarat High Court judgment, they went everywhere. They filed they went to the IT grievance committee. They went to their GST authorities. They also wrote it to CBIC. Everything they tried doing everything, but nothing happened. Now, when this matter came up before the court was very clear that they have already ran from pillar to pole to get this ISD credit, which is their vested right. So they should be allowed, they should be permitted to distribute the credit. And that is where the High Court judgment, at least in the order, they stopped. Now, again, if you look at the court order, it does not really provide the manner in which this credit should be taken. So again, though this High Court gave a relief to this Bodil Chemicals, but in my view, it does not really lay down a clear jurisprudence for others to follow. So distribution of ISD through GSTR6 by an ISD can be justified as a correct mechanism, but only on the basis of Bodil Chemicals. Somebody may say there were lot many facts. He has approached to all the authorities. He was not able to distribute it. So you cannot keep it as a ratio. Now, that takes us to other High Court decisions, how this ISD issues has been taken care of. The one which is relevant for everybody to understand is, so far as those who are talking about ISD credit, is the Colgate-Palmolive decision. Now, this is the first time when Bombay High Court came for the rescue for the ISD problem. Again, this person has distributed the transitional credit and they have disclosed the distribution in the Tran 1 itself. And this because the recipient units, they were not getting this credit through Tran 1 form. What again, recipient unit went ahead and took the credit on the basis of the invoices of the ISD directly in 3B. But again, there was a mismatch, etc. They went ahead and filed the writ petition. Now, interestingly, first time in this Colgate-Palmolive, they said, see, since Supreme Court has opened the window, we are directing the authorities to accept their revised declaration in Tran 1, either electronically or manually, for taking the credit of this ISD invoices. Now, if you effectively ask me, what this Bombay High Court has done is, they have opened the gate for ISD again. So, what ideally I should have done, if you would have come to me in July 2017, so far as ISD is concerned, if I read 140 subsection 7 and form and whatever it is, or the rules, ISD is only covered under 140 subsection 7. Ideally, what you should have done is, from the old ISD, you should have raised the invoices in the name of various units, and at the units or the plants or the service recipients, Tran 1, you should have claimed this credit in your Tran 1 in column 7B, which Yogesh has explained. And filed the Tran, this credit should have been included at the recipient unit and in the Tran 1 of the recipient unit. That's how it should have been done. Now, I think the same problem was with the Colgate because they went ahead and filed ISD Tran 1, and they were not able to take forward. Now, at least Bombay High Court said to Colgate-Palmolive that, okay, you go ahead. If the problem is that it should be the form, as per the form, it should be the SSC's recipient unit who has to take the credit, then you should allow the revised declarations in the form GSTR Tran 1 of recipient units and let them take the credit at the various locations. Now, after this judgment, there were series of judgments, though the facts were slightly different. There were different problems for different ISD registrations. Again, in this case also, when I talk about APAR industries, again, Bombay High Court, similar is Unichem. All of them, two things were very clear. If I talk about the takeaway of these Bombay High Court, that they directed to file a Tran 1 at the recipient unit. No further credit to be filed by the recipient unit on filing Tran 1, which means they say, because you have already taken a credit in the form of 3B, this exercise of filing a Tran 1 is going to be kind of regularizing your past mistakes, if you ask me that way. Because 3B is not a manner in which you can take a transitional credit. The manner is Tran 1 at the recipient unit. You file a revised Tran 1 in the recipient unit and let this be considered as a rectification of your mistakes which has been done in the past. Now, if these are the mechanism how these high courts are telling how to avail it, rather there is a guidance note also of 2018 which used to say that how you have to take in table 7B of Tran 1. Now, if these are the mechanisms which the high courts are giving, what I feel is, though today you have a chance till November to rectify your mistakes, but I will talk about various scenarios or probably other issues which can come when we really look at the manner in which you are regularizing it, which though these high courts never went into it, but tomorrow this can be there. So I want you to be really aware of how to answer them. If tomorrow you also go ahead and file a Tran 1 at your recipient units, how to answer these questions which can come. First of all is, what might have happened is, when you have taken the credit in your 3B directly, you might have taken the credit of IGST. If you would have filed Tran 1 and included this ISD credit, your Tran 1, that will be a CGST credit. Now, if this IGST you have already availed at that time and you have utilized it against your CGST or SGST, then somebody can raise a question that how can you utilize a credit which ideally should have been set off against only the center and not the state. Now that you have done it by merely rectifying your mistake in the form of filing a revised Tran 1 at the different unit, you cannot set off that credit against the SGST. Now, this is one area which can be raised in typically in some of the cases, which you really have to look upon how we have to, what answer we have to give. Now, in my view, what you should ideally do is, once you receive this CGST credit in your Tran 1 and of the recipient unit, and you have availed the IGST credit earlier, reverse the IGST which you have taken incorrectly earlier. While reversing the IGST credit, pay that IGST credit through IGST or through this new CGST credit, so that at least whatever is the mistake which have been done in past is brought to at the level at which it should have been. That's a very, very important advice. Kindly keep a note of it, how to reverse the credit, because the High Court judgment says you are going back to normal. Once you take the credit, you have already taken the credit in 3B. This is only going to be a declaration of what you have done. But the moment you file revised Tran 1, it will get reflected in your ledger. But how to rectify that? This is something, because if this IGST is already been utilized, there is a problem, because you might have utilized against SGST also. If it was CGST, you could have only utilized for CGST. That's some typical point which I think you should have a note of it. Another is, once you go for this revised declaration as suggested by Bombay High Court in Colgate and APAR, question may come, why, if you have already utilized the IGST credit, that was the incorrect credit, you are entitled to only CGST credit. Now, because you have reversed the credit today, but during this period you have utilized it, you should pay the interest only. That is a very, very common issue which authorities are raising. Tomorrow also this may come again, that since you have utilized this credit, you simply pay the interest to me. Now, the answer to that is actually lies in a close reading of these high courts itself. Why I'm saying is the High Court does not say that by filing a revised Tran 1 or a revised declaration in the form of Tran 1, you are claiming the credit. They are only saying you are validating your act. So once I am validating the act, High Court itself is saying you are only regularizing your earlier actions. The credit taken by you is correct. So on these basis, one may say that please read the High Court. It doesn't say I am first time correctly availing the credit. It only says I am regularizing my miss. So applying that logic, interest can also be argued. Now, coming to another important point, in fact, I touched in the beginning also. Can ISD raise a fresh invoice for the service credit or the pre-GST? Because as I said, section 140 subsection 7 says input tax credit can be distributed by the ISD under 140 subsection 7 and shall be eligible for distribution even if the invoices are received after the appointed date. Now, do I need to really say that ISD can raise this or distribute it because it is not an input tax credit? My view is when they are saying input tax credit here, it should not be understood as what is given under the definition under section 2. Because the beginning of the section itself says is unless context otherwise require. Now, when I'm talking about 140 subsection 7 and ISD and the services received prior to the appointed date, it automatically means it cannot be the input tax credit as per GST. Therefore, the definition here should not be understood as the definition under section 2. The invoices to be raised has to be the invoices of the earlier ISD. I will raise those invoices, distribute in various locations, file a revised Tran 1 there, and based on that, I should take the credit. That's how it has to be done. Okay, now this is something really typical. I mean, just to give you a few examples, you are a manufacturer of goods, and in the pre-GST, you were manufacturing in some area base, let's say Himachal, Uttaranchal, etc., and you were not paying any excise duty because you were exempt. After introduction of GST, you shifted to a budgetary scheme. You started paying GST. Now, when you have availed these services at that time, the credit was in respect of at least those area base, the credit was not available to you. Now, can I today take this credit because this ISD distribution under 140 subsection then should be as per section 20 of IGST Act. Once I say the distribution is as per 20, and also today these units are not supplying any exempt goods, rather they are providing paying GST in respect of it. Now, this is something which is very, very arguable point. Fundamentally, if you look at it, you are not entitled to credit because these are pertaining to area-based exemption units. Had these services were distributed by the old ISD formula, you would have distributed to that unit, but that unit would have never able to avail it. But if I read the section under 140 subsection 7 and read with table 7b, they are calling it as an input service in transit, if you really look at that way. Today, area base is converted to a budgetary support scheme. So, and distribution we are doing as per section 20, as I said. Therefore, I should not look at how standard credit or rule 7 or rule 6 at that time used to apply this. Even if in a particular unit, forget area base, even if in a particular unit you were manufacturing certain goods on which GST was nil, and subsequently you started paying excise was nil, subsequently you started paying GST 5%, 12%, etc. Again, ISD was only a mechanism for distributing the credit. availment of credit and utilization of credit or reversal of credit under old regime was also at the unit level. So one may say that 140 subsection 7 allows me to take the credit which is eligible for distribution. Section 20 allows me to distribute the credit at the locations. Once I reach at the location, even though the services were received in an era when the goods were exempt, today what I am doing is I am subjecting it to taxable activity. Therefore, the credit should be allowed. But having said that, today I don't know if any of you have faced this issue so far as earlier services credit distributed through ISD. But this is some area where I feel definitely going to be a big challenge, because most of us are distributing or distributed the credit as per the new formula and taken the credit at the locations without looking at where earlier units were area based units, exempt units. I was manufacturing any exempted goods in those units. At that time, when the service ought to have been received by me, the services have actually gone into the activity which is exempt from tax. But I feel it's a fairly arguable case, but we have to see how the courts will react to it. Now, certain couple of more situations I'll talk about, maybe helpful to some of you which are talking about when I'm talking about ISD is, what has happened is the certain cases where you have a centralized registration. And so when I say centralized registration, you have an office, there was a centralized service tax registration, and also there was a ISD registration at that time, which was covered under your centralized registration itself. Now, when the invoices were received by you in the pre-GST regime, they were addressed to that office. Now, because of this technical glitches, etc., you have filed a Tran 1 in your ISD plus centralized registration, but this credit was ultimately blocked when it came to your electronic credit ledger, or these credits were never reflected in your electronic credit ledger. So if this was a scenario, and because you ultimately at that time 2 years in 2017 or 18, nobody could have imagined that 5 years down the line Supreme Court will come for my rescue. People have raised a cross-charge invoice from the head office to various normal registrations, and the credit has been availed in those registrations. Now, if this is a scenario which some of you are facing, there are ways in which today at least the Supreme Court and these high courts can come to your rescue. What you can do is, to the extent the credit which was there in your returns. Sir, can you just keep it on mute, Nandaji?
Yes, sir. So actually, some
No, I
time
understand.
concept.
I can see you. I have only one slide left. I will not go beyond that.
Okay, fine.
I will come back in a question answer session.
Okay.
So as I was explaining, if this is your scenario, at least in your centralized registration, you should file a Tran 1, carry forward the credits as a centralized registration credit. And in your normal registration, as I explained to you earlier also, file a Tran 1 there and try to regularize the credit which you have availed to 3B. Now, considering the paucity of time, I will simply come to last scenario where you have a multiple ISD. So I'm sure there are people who used to have in a particular larger state like UP, you have multiple ISDs, one in Lucknow, one in Kanpur, etc. But now in GST, it's a state concept, so you have only one IGST registration. Now, what you can do is, if you have already distributed that credit from one of your centralized ISD registration and taken in your 3B, and now you are rectifying it by filing a Tran 1 at a recipient location. Also file an addendum to your invoice, because this GST invoice from a consolidated or single ISD should reflect head office, branch office credit which are distributed in a particular manner. So if there is a 150 credit which you have already taken in your 3B at a normal registration, file a Tran 1 in normal registration as a backup document. If 100 pertains to your head office, 50 pertains to your branch office, put an addendum to the invoice, show the breakup properly, so that tomorrow, like what Mr. Bimal Jain in the beginning correctly said, is they are going to get some 2-3 months to verify whatever you are going to file. That is the time when the real challenge will come. Be prepared for that, because this everything what you're going to file today, nobody is asking you a question. Tomorrow, all those declarations, all your invoices, everything will be questioned and will be scrutinized very, very carefully. So be prepared for it. Having said that, considering the time constraint, I'll close there. Whatever is the questions, etc., which you want to ask, I'll try to answer in the question answer session, and or otherwise I will re-log in at the end once the session is there. Thank you so much. Thank you everyone for the patience listening. It's always pleasure to talk to you. Thank you so much.
Thank you, sir. Thank you very much. Thank you. Now I request to Mr. Saurabh Kumarji to present his presentation overview of Tran 2 with all tables to be filled of transactional credit and related issue and open issue in the filing, public revising the Tran 1 and Tran 2 with the resolutions. Mr. Saurabh Kumar is a managing associate of Nitya Tax Associates. He is an advocate by profession. He has more than 5 years experience in handling indirect tax litigation. He makes regular appearances before judicial and quasi-judicial authorities, appellate tribunals, high courts and supreme courts, representing the clients. So, Saurabh ji, can you hear me?
Yes.
Yes.
Thank you, Randaji. Can you see my screen?
Yeah. Now coming, screen is coming.
Thank you, Randaji, for warm introduction.
Yeah, thank you.
Thank you to my co-panelists as well who have set the base right. Since we are short of time, I'll try to cover this within the stipulated time period itself, so that we are all ready for the question and answer sessions, because that seems and it appears that people have a lot of questions regarding this filing, and we only have 7 days left to meet the deadline. So before I move forward, I have one interesting highlight or interesting point that I need to mention here. We all address this Supreme Court directions as Philco Trade judgment. Very recently, Philco Trade had filed an application before the Supreme Court, stating that the issue in their matter, at least before the Gujarat High Court and in the Supreme Court, was relating to constitutional validity of 1-year condition imposed on stocks, carry forward of credit of stocks, which is squarely a different issue and not relatable to the directions that the government or the Supreme Court has given here. They did not have an issue of technical glitch or an issue where they could not carry it forward. So what the Supreme Court has done is that they have reinstated these appeals, at least in the case of the Philco Trade judgment or Philco Trade, on the same appeal numbers. So while it does not impact the directions in all other cases for the which is universally applying to all the taxpayers across country, but this is one important aspect which I wanted to highlight, that this judgment is no more a Philco Trade judgment and another. It's a general direction now, and it is run in a different name altogether now. Another point that I wanted to highlight here is that one thing is sure, that we are not only filing or revising Tran 1, Tran 2 for the differential amount. We are going to file revised Tran 1 and Tran 2 for the entire amount, in fact. So one thing needs to be clarified right at the beginning, that whatever Tran 1, Tran 2 that we are going to file now, it's for the complete amount and not only for the differential amount that we have either missed or we have not been able to carry forward in the GST regime. Thirdly, Bimal sir was also pointing out whether there are any technical glitches happening now or not, because the circular is specifically stating that there shouldn't be any. So just wanted to highlight that the circular has mentioned that I will be able to download my earlier file Tran 1, which many of the taxpayers are trying, but they are not able to download. Secondly, after filing also, there is a possibility before submitting to download that and verify those details. Those problems are also arising, and there is a technical glitch to that extent as well. So having said this, I'll just move on to the contents that I'll be covering in as far as Tran 2 filing and open issues are concerned. Firstly, who can file Tran 2? This needs to be set right, because there have been certain difficulty in understanding that as well, as to who can file Tran 2 or not. Then the steps to file revised Tran 2, Third would be the open issues that we'll be dealing with, and then the Q&A. Obviously, at the end, we'll be taking up all the questions and apprehensions of the taxpayers. So 140 clause 3 is the provision which basically pertains to filing of Tran 2. So these are the situations where Tran 2 can be filed. A recipient has received certain goods that has an element of ED, that is excise duty, VAT or CST on closing stock, but the duty paying document is not available. In such a situation, the government has framed a scheme under the rules 117 clause 4, where they have said that if at all your credit, since it was not allowed in the earlier regime to a trader or similar kind of businesses, on specifically on the excise duty aspect. So what they are doing is that they have given a scheme where it can be given on 40-60 basis, 40% of the credit or the 60% of the credit. We'll discuss that sometime later as to when you get 40% and when 60%. In such a scenario, you need to file Tran 2, where the duty paying document is available, including the credit transfer document. Mind you, duty paying document includes the credit transfer document as well. This came through an amendment in this VAT rate rules itself, where CTD was made a duty paying document there in one of these rules. So if that is there, then you need to file Tran 1 only. With Tran 1, obviously, if there is a CTD requirement or a credit is being claimed or transitioned through CTD document, then in such a scenario, one needs to file Tran 3 as well, which needs to be uploaded on the portal while filing Tran 1. Along with the Annexure A, which is enclosed to the circular, which contains a lot of declarations regarding claim of the credit, litigations, 3B, etc. So those needs to be taken care of. Apart from that, I was saying that 60% will be the credit will be allowed to traders on such goods which attract GST at the rate of 18% or more, and 40% for other goods. These are the conditions which need to be satisfied and are very important. Goods were not unconditionally exempt under the previous regime. Document or procurement is available. A person who has filed Tran 1 column 7B is the person for whom Tran 2 will be opened and not otherwise. So if you're directly filing Tran 2, mind you, it will not be applicable to you, or it will not be open for you unless you file column 7B, and it should be matching with Tran 2 as well, which we'll discuss while discussing the steps for filing Tran 2. And another very important point is that the benefit accruing is to be passed on to the customers. That's very important here to be analyzed, because this is one benefit which was not available to the traders, etc. before the GST regime. So government has mandated that, or in fact the law has mandated that the benefit, that is the anti-profiteering provisions, will equally apply to those traders as well. So this is about the basics. I'll try to move on to the steps quickly so that we can be aligned here as well. So these are the steps. Firstly, we have to log in on the GST portal and navigate to do transition forms, which is there under the column services, transition forms. Then we need to select Tran 2 tabs, because there will be 3 tabs which will be coming up: Tran 1, Tran 2, and Tran 3. So we need to select Tran 2. Obviously, before filing Tran 2, I am assuming and presuming and proceeding on that basis itself that Tran 1's column 7B has already been filed and the stocks have been declared in Tran 1 at least. So this scheme of 60 and 40% was available for 6 tax periods. So essentially, the person holding the stocks or having the stocks as on closing date needed to sell those stocks under GST regime, applying the GST over such invoices, and for each tax period for 6 months they had to file Tran 2. But now since it will be one-time opportunity, so the government has basically through the circular has allowed only filing Tran 2, a consolidated Tran 2 for the entire 6 months period. Then one needs to, there will be 2 tabs appearing. It's a short form, so it doesn't carry a lot of declarations here, but there are 2 tabs appearing where we need to make these declarations. One is tab 4, which talks about details of inputs held in stock on appointed date, in respect of which is not in possession of any invoice, document evidencing payment of tax carried forward to electronic credit ledger. Same details needs to be filled if at all in some states or taxpayer is operating in some states where where the VAT was levied at a single point. So 4 and 5 can be chosen accordingly. So what will column 4 entail for us is that we need to add details. And before that, two things. One, if you have a voluminous detail, you need not go directly on the common portal and file in the relevant columns. It is suggested that you download the JSON file upload functionality, put all the details in there, and then upload it back, and then file it by submitting it, and also fixing the DSC, etc. So the government has also recommended in the circulars that this online filing can be avoided when the data is voluminous. The JSON file upload functionality should be used in such scenarios. So this is the table 4. This contains HSN description, quantity, UQC quantity. There are two further sub bifurcations basically, which one is in relation to opening stock for the tax period. The first column should match with the 7B column of Tran 1, and then the details of the outward supply made of those stocks which we have declared either in 7B as also in table 4 in the first part. So those details have to be given. Ultimately, one has to calculate the ITC allowed based on the 60-40% scheme that is there. And then at the end, one needs to disclose the closing balance based on the quantity, how much quantity is left even after the 6 months period or 6 tax period has passed during which the scheme was actually operational. So what needs to be filed in all these or filled in these columns, HSN, applicable HSN, and as entered in table 7A. So whatever we have declared in 7A, 7B, that needs to match here as well, so that there is no problem in carrying forward all the credits. The description to be mentioned, either description or HSN is mandatory, so not both of the columns are mandatory, both of one can be chosen from. UQC, unit quantity code, is to be entered, then quantity opening stock for the tax period, and as entered in table 7A, that also becomes relevant here. So I am again reminding everybody that Tran 1 filing in table 7 is very, very important. Unless that, you will not be able to file and carry forward your credits in Tran 2. Then again, these values of what quantity you have sold in the 6 tax periods, the total value of outward supplies, the central tax that you have applied on that, the integrated tax, etc., that have been applied. So all these details needs to be furnished here as well. So based on this, we now move on to, so in all these tables, basically one needs to add details, and details basically either you download the functionality or you can add invoice wise details each time for each invoice. Then this is the table 5, the same columns, same descriptions, etc. The only difference would be that taxpayers operating in states where there was VAT at single point, those taxpayers can only file table 5, and that will be complete from their end. Same declarations as given under table 4, table 5. As I said, the only difference would be in which state you are operating into right now. Again, adding details, and then finally you have to click on save and then file with DSC and EVC, and your file is complete. Before filing also, you can always download and check your what the details that you have filed here, which I initially referred to, and I said that there is a technical glitch. People are not able to download the filed or the saved details for verification. So that is one technical glitch that is also appearing. And with this, I now move on to the open issues. Most of it, my co-panelists have already covered, but I'll still just reiterate those for clarity purposes. Like Vimal sir also said initially that there will be a verification of claim within the period of 90 days. But what is the scope of verification? Will it also entail verification of the entire credit or only the differential amount that I'm carrying forward here? Will it also be denying credit once I was not eligible under the previous regime, or by which should ideally be denied by invoking rule 14 of the SINVAT credit rules or not? So we don't know the scope of verification. It appears from the circular that the entire verification will be taken place, which essentially looks like an audit of the Tran 1 or transitional credits that you have carried forward, and then a show cause notice, and then adjudication, which will now then go on to appeal, etc. So it is another litigation that we are going to enter into as such. So as I said, the issue relating to stocks older than 1 year, which was present in the Philco trade judgment, has now been restored by the Supreme Court. that matter will now be heard by the Supreme Court in due course. So that issue still remains open, whether one can carry forward this 1 year credit the stocks older than 1 year or not. That issue still remains open. Meanwhile, it is suggested, or maybe because your rights are going to close by November 30, and it is therefore suggested that one can always carry this forward, but subject to the litigation that one can always face, because it will be objected to in the adjudication proceedings that will follow thereafter after filing of Tran 1. Carry forward by ISD, Mr. Mehta has already dealt with this, so I'm skipping this part as such. There is one declaration that is coming under Annexure A. Many of the taxpayers, pursuant to the judgment of this of various high courts, have taken these credits in GSTR 3B. Currently, these declarations are required whether you have taken these credits in 3B or not. But the repercussions has not been provided as to one who has taken the credit in 3B will also be facing any sort of interest liability, or whether if you have taken in 3B, then the issue will settle and there will be no further demand, etc. or not. So these three conditions or these three situations may materialize where it was allowed by High Court and portal got reopened. It was allowed by High Court, portal was even then not reopened. And some taxpayers have also claimed credit without even having a High Court ruling in their favor as such. Again, the credit pertaining to pending statutory forms, particularly I am discussing this issue because in the state of Haryana, we have come across a lot of queries where even after the assessment, the forms received after June 2017, those refunds have not been allowed to the taxpayers in terms of law. So what do the taxpayers do? That they have not been allowed the refunds, and at the same time they are not allowed to carry forward these credits or mention these statutory forms in the Tran 1. Then what happens in such a scenario? It is again suggested that one may litigate this matter by say, or maybe protect their right by filing this Tran 1, including these statutory forms. Obviously, understood is that the adjudication process will entail denial of these credits, but one can definitely context based on the rights and the losses that they are going to suffer because of not getting the refund, at the same time not able to transition these credits as well. Again, this carry forward of credit of cesses, the issue is alive before the Supreme Court. People who have not yet carried forward these credits, their rights are essentially closed in the sense that they will not be getting any further opportunity to revise or file Tran 1, even if Supreme Court allows these cesses. Without commenting on the merits, I would rather suggest that one can put these cesses also in the Tran 1 and then see what is the fate of the Supreme Court judgment. This should not be utilized to avoid any interest or any kind of liability as such. So this is all from my side. I'll be happy to take questions. Nandaji.
Thank you. Thank you, sir. Now open for question and answer session. Our expert are given the answer of the questions. I think that is 59 questions are coming here.
Okay, allow me, Nandaji, to take it forward and request my all three speakers to be switch on your video so that you can take queries of the participants. Many queries we got today.
60.
First of all, at the outset, let me thank Mr. Saurabh, Mr. Shibam Mehta, Mr. Yogesh Gawa for excellent presentation. And we got good audience. See, Tran 1, Tran 2 at the fake end. So many participants watching today's webinar, quite amazing. So still we are having many queries, which is quite evident from the question answers, which is question posted in question answers chat box. Nevertheless, quickly, let me start with first question from Janvi. She's asking, can we transition the credit now through Tran 1 of normal registration in table 7B of recipient state, or ISD has not raised any invoice in the earlier regime distributing these credit? Mr. Shibam?
So, as I explained in my presentation, if they have not done it, now it's the time to rectify it. Now they can raise the invoices for the ISD and take it under this 7B, because this is the only opportunity which is left, and definitely it can be used to rectify that mistake.
Yes.
So, but just, yeah.
For Saurabh, for you, some Mr. Tyaj Agarwal is asking, can we file Tran 2 by selecting last tax period December 2017?
Only the last period needs to be selected. That's the one consolidated form, and last period tax period can be selected. Yes.
Okay, pertaining to Tran 2, once again, Saurav, if goods are procured from excise duty exempted unit, area-based exemption, can we claim ITC in Tran 2 on such goods? Saurav?
Yes, sir.
The question is, goods are procured from area-based exempted unit, maybe Uttaranchal. He's saying that if I'm having that stock, can I avail ITC on Tran 2 on such goods?
But there was no tax levy itself in the first place on those invoices from where you have procured, because these were area-based exempt units where they were not allowed to charge, or they were exempt from charging any excise duty in the first place.
So meaning thereby they can't avail credit on such
Right.
stock. Okay, Shivam, do you agree? making
yeah. No, I think it's a very. I'm sure this must be one of our practitioners who are asking this question. I'm sure about it. It's a very clever question. He's saying taking under Tran 2, which means even if I do not have a duty paying document in hand, I can avail the credit. So they are not going into the fact as to who has paid the duty. I mean, that's very clear. If you are buying from a trader, the duty was paid by the manufacturer, and you buy for a trader, you don't have a tax paying invoice. Whether the ultimately, then nobody's checking. So if a similar set of facts, maybe just to counter what Saurabh said, is in a similar set of facts, if I buy from a trader and he raises an invoice to me, I do not have a duty paying document. The trader may not tell me whether he has brought it from an area base or a non-area base. So it's a tricky situation. I don't see a real bar in the section. So obviously you can try. I mean, there is no bar per se. I can simply say if I do not have the copy, or I don't need a copy of the duty paying document for uploading it, right? So it's slightly tricky. So maybe one can try their luck on that. But yeah, quite the logic answer is what he said. Tax is never paid on these stocks. But think of a situation where I buy from a trader and trader has bought from him. So in that situation, also no tax is paid, no, in the chain.
Just to add further for Saurav and for you, Mr. Shivam, exempted goods in pre-GST era made taxable in GST regime. So I'm having no document for central excise. It was exempted, now taxable. So if I take that analogy, Saurav, you will agree with me. We have chances and we can try. And that's what Mr. Shivam was sounding. And my view is also on same point.
Sir.
Okay. Going to next point, Shiva Kumar asking how to file Tran 2. Saurav, maybe within 1 minute quickly you can run up. Within 1 minute.
So basically, one needs to file column 7B first, declaring their stocks as on June 30th, 2017, and then move on to file Tran 2, where the relevant columns are there. One needs to declare their stocks first, and then the output supplied that they have made and the taxes that they have charged. Based on that, they need to calculate what amount of credit that needs to be carried forward, basis whether you have 18% plus GST or 18% lesser GST. And 60-40 ratio, you will be allowed.
Okay, Yogesh, for you, there is the question asked by Mr. Paurab Popat. If there is no change or nothing is left to claim, then also we have to file fresh Tran 1 and Tran 2.
So the CBIC has clarified in Circular 182 that if you're filing again this Tran 1 and Tran 2 and there is no change, it will be ignored by the officers. So why should we file the Tran 1 if there is no change in Tran 1? So I would not suggest, but even if you file, they will not consider anything about it.
Need not required.
Yeah, it's not required.
So next
Rather it may lead to a problem, because now you file it again and it goes to the verification. In the past they might have missed it.
Correct.
This may create another problem for if you don't have no benefit to file. by filing a revised Tran, why to go ahead in that route and give them an opportunity on a plate that come and verify my document? There is no need whatsoever. I think.
Correct.
It's not advisable to do it at all.
Correct.
Forget the circular. We should not do it. Forget. करना ही नहीं है. उधर जाना ही नहीं है.
Correct.
शिवम जहाँ आग लगी हो वहाँ जाने नहीं चाहिए. Okay, next question, Yogesh, to you once again. Mr. Mukesh is asking, if notice issued under DRC 01 for wrongly ITC used Tran 1, then now can be paid through DRC 03 and also can be utilized ITC if available in the credit ledger.
So, first of all, there has been some litigation stating that the provisions pertaining to Section 73 or the interest part may not apply to the transitional credit because it is not in a stricter sense an ITC. So I believe the department won't agree to that because they have a position taken that once it goes to your e-credit ledger, it is like an oil tank. You put one oil, you put another oil, it's get mixed. And this is nothing but an input tax credit. So first of all, obviously, you'll have to reverse the ITC. Department will ask for the interest and penalty also if it is a fraudulent case. And yes, you can pay through DRC 03 and you can utilize your input tax credit as well. So I don't see that the provisions regarding the input tax credit or payment of tax through cash or ITC would restrict you to avail to use the already taken ITC because department itself is treating the transitional credit as input tax credit. So
Yogesh, for the benefit of participants, 3 questions emerging out of this query. First, can I pay through credit account? First of all, because he's asking this question, do I require to pay in cash? Can I use my ITC ledger to pay off this liability? So answer maybe it need not require to be in cash. We can pay through e-credit ledger.
yes.
Second question, which could be interesting for all of us, all 3 panelists here, that maybe I've used the transitional credit, which I was not supposed to. And now I got balance in my e-credit ledger. I want to pay from that particular e-credit ledger. So my liability pertaining to past period, I'm paying with current period e-credit ledger, whether permissible or not permissible. Maybe to make it more interesting, I'm creating this question in a very black and white way. So these 2 questions are very important here. First question is known, it can be paid through e-credit ledger. What is your view, which I'm asking you, then I will check from other panelists as well. Past period liability, you are paying through current period e-credit ledger, possible, permissible?
So in my understanding, yes, it is permissible. There is no provision which states that past period liability cannot be paid through e-credit ledger. So I personally believe that the provision which says only output tax liability can be paid through e-cash ledger, that output tax liability has to be construed in a manner that even if a demand comes for the past period, that can be covered by the provision for utilizing the e-credit ledger.
So you are of the view that past period liability can be paid through current period credit ledger. Then whether interest would be leviable?
So it depends on the quantum of credit we have.
Yogesh, just simple, 10 lakh rupees past period liability. You were not having enough credit in the past period. Now with the
then
current
interest is leviable, sir. Yes, interest is leviable, so it has to be a continuous balance from the period. Yeah.
So indirectly answer is coming in. If I'm not having enough credit for the past period and paying through current period, then interest is leviable, right? Sebam,
Yes.
what is your view? Unmute yourself.
Yeah, sorry. See, obviously you can use your credit ledger, that is very clear. So far as in this example, what you are taking, suppose I have taken a 10 lakh credit, balance has gone down. If the balance is already there is no question of now using this additional credit, right? Practically, if there is a balance already, there was a 10 lakh wrong credit, 20 lakh credit already there. So there is no question of interest because to that extent, I have maintained the balance. The moment balance falls beyond or below that, interest is automatic. You have to pay. Now, today, when I'm paying the interest and I'm utilizing it, Section 49 comes for my rescue if I'm not wrong. Section 49 talks about the credit utilization for various purposes. It clearly says can be for your tax, can be for your credit, can be for your this thing. So in my view, yes, you can pay. The moment the balance goes down, you have to pay the interest. You are bringing a liability to a particular date when you are utilize this credit balance to discharge it. So definitely the interest will be there because your balance has gone down, but credit can be used. I don't see a challenge in doing it. Only point is, uh, I don't know. Maybe others can also clarify, sir. This credit is going to come immediately the moment I upload this Tran one, or it will take time for verification. Those are the commercial decisions to be taken, because if I have already utilized a wrongful credit and there is an interest cost of 18%, should I, for this credit, become a valid credit of the new Tran one and continue to pay 18%? That's something which probably a commercial call can be taken depending upon when this balance will be reflected. So on 23rd, if I file today in the evening Tran one, tomorrow the balance is there, yes, I can do. But if it will be subject to the verification, I'm not sure of the mechanism. That's why I'm maybe it's quite a this thing. But if it will take that the verification will be done, then I don't see a point in using it. Better pay it off, use that credit for something else for a rainy day tomorrow.
For the benefit of all the participants, we can summarize this point in this manner, that there is no restriction per se. We can use our e-credit ledger for discharging past period liability. It may be liability, it may be wrongly availed credit. Only thing which is coming out in clear terms for the past period liability or reversal of credit, if I've utilized the same, which was wrongly availed, then interest is leviable, which is in turn giving a hinting that past period liability can't be paid with the current tax period. This is the other way to look at the answers. So that is out. Saurav, do you agree with me?
Totally, sir. Totally, sir. What the point that was put forth is right. There is no restriction as such. Yes.
Another question, Saurav, to you. Saurav, to you. Another question. Mr. Bedyanathan, where the same credit can be carried forward to subsequent year based on Supreme Court decision might be in continuation. I can't read it, so I'm skipping this particular question, but going to question of Mr. Yogesh. Which table trader should fill if he is not registered under excise, but registered under VAT? Having excise invoices and want to take credit on stock as on 1st July 2017. Table 7, 7A, B, C or D?
So first of all, thanks for giving the options. So it should be 7A, in which 140 subsection 3 is covered, 4B is covered. And so as far as the VAT is concerned, sorry, it is 7C for the VAT, state VAT transition. For the excise in similar case of service tax, it's 7A. To answer your question, it should be 7C.
Okay. So, Saurav, for you, another question. Mr. Raj Agarwal is asking, can we file revised Tran 1 or Tran 2 where intimation informed GST DRC 01A issued under section 74 subsection 5? Simply he's asking, I've got DRC 01A. Can I revise my Tran 1 and Tran 2? Or it is barred by that circular?
It's a very, very interesting question here. Reason being that whether DRC 01A is deemed to be start of a litigation or not is the primary question, basically. Which I feel is and in various judgments recently in context of interpretation of the terms proceedings in various sections, say for example 62B and or for example advanced ruling authorities, whether a proceeding is pending or not. In that context, it was said that only when a show cause notice is issued is said to be the start of a proceeding or a litigation as such, which entails an application of mind.
So your answer is yes.
Yes.
Okay. Sivam, for you quickly, can table 8 be used for distributing credit availed in ISD registration of service tax?
So in the past, I have seen the table 8 is being accepted in the Tran 1 form. But as I explained in my presentation, ISD credit has to be at the recipient location. Table 8 is not meant for or rather Tran 1 itself should not be at the ISD level. But in the past, I have seen many clients have shown me that Once you have distributed it under table 8, it gets automatically reflected at the recipient location. So that has been even accepted by the authority. So practically it has been, but now that you are rectifying your mistake, better you do it at the recipient location the way I explained in 7B at the recipient location. That's a better approach, correct approach, legally correct approach as per me.
Maybe another continuous question. Quickly, I'm chipping in. We had revised our service tax ISD return in September 17, which increased total credit, which was not further distributed. Hence, we were not able to transition through Tran 1. Can we transition it through Tran 1 now? If yes, please confirm the table in which the values can be reported.
Yeah, if you're talking about, when he's talking about service tax returns, is he talking about the ISD return? That's my first doubt. If he's talking about ISD return, the moment this credit is increased by filing a service tax return, the same formula, the same mechanism, 7B at the recipient locations can be used to take this credit.
Okay.
It should not be a problem.
Coming to one more question to Saurabh and Mr. Yogesh. First to Saurabh. I want to revise Tran 1. Earlier, we have taken KKC credit. Now, if we are revising that return, should I exclude KKC amount as per closing balance of ST3 availed in table 7B of Tran 1? Saurabh?
Sir, as far as the issue relating to transition of cesses is concerned, it's a highly disputable issue. One can always do the downward revision if they do not want to contest that, because it is ultimately going to turn into a litigation, which will be put to rest only when the Supreme Court decides the matter finally. So, yeah.
Mr. Yogesh, last question, Mr. Nagarajan Krishnan. Whether separate field available for transitional credit under section 140 subsection 9, since this credit is not formed part of erstwhile return closing balance.
So in table number 5A itself, it talks about the inclusion of those credit pertaining to section 140 subsection 9. Because see, if you have not claimed in your earlier return because it was already reversed, so now you can take that credit which you have reversed due to non-payment, provided that you pay to your vendor within 90 days from the appointed date. So yes, in table 5A, you can take 140 subsection 9 credit.
All right, there are many questions. We have to really say sorry to all the participants as we are running short of time, but a splendid presentation by all three speakers. So compliment from my side, and I'm sure you all are complimenting them as well. So write a word of appreciation for three speakers, their splendid presentation, technical presentation. Writing one positive word for a speaker, a motivation and encouragement. That gives more momentum for the next presentation. So I'm complimenting all three learned speakers and thanking all the participants who are taking out time and joining today for this important webinar on Tran 1 and Tran 2. Last date, 30th November. We tried our best to give clarity, resolve your queries. Maybe some of the queries are left out, which you can always send, and we see that those are responded back to you. Thank you, Secretariat team also.
Thank you, Vimalji.
Vimalji, thank you everyone. Just you should also say all the best, because as we all have highlighted, 30th November is just 1 week left. And I could read the chat box. They're still having a technical glitches. So all the best, and may God bless their systems and they're able to file Tran 1 easily, at least this time. And nobody goes back to court again saying, sir, again there is a technical glitch and nobody is able to file it.
I need favor from Saurabh because he pinpointed still technical glitches are there. Saurabh, can you send me what exactly problem all about? We will send to GSTN team immediately by tomorrow.
Sure,
and if anyone faces any such problem, they can come back to us. It is our initiative, and from PSD IDT, we'll make sure things are happening in our way. But thanking each one of you for joining today, thanking my PSD Secretariat team, Mr. Nanda, Dr. Sharma, and to everyone concerned who are joining today, taking out your time, and I hope you have enjoyed today's webinar. Thanks for watching. Thank you very much.
Thank you, everyone. Thank you, everyone.
Thank you, sir. Thank you, Chairman sir. And thank you all the dignitaries.
Thank you, Sharmaji.
Thank you,
Nandaji. Thank you.
Thank you, Vimalji. Thank you, Nandaji.